My name is Kiiru Muhoya. I'm the founder and CEO of Fingo Africa. Fingo means finance on the go. So, what is a neobank? A couple of years ago, I opened my first bank account. And like many of you, it was quite an experience. The traveling, the environment of a bank, the customer experience, and the time it took. For me, it was 3 weeks. Today with Fingo, I can open an account in under 5 minutes. A radically different experience. Now, there's an image on the screen that represents a traditional bank and a neobank, and I'm sure you can guess which is which. So I'm here today to give you my thoughts and my ideas on what banking is, what banking as a neobank founder is, and what that means for me, what that means for Africa, and what that means for technology. So to get into definitions, neo means new. And it also sometimes referred to as challenger banks, disruptors, or even just fully digital banks. But there are some inherent differences between ordinary banks and neobanks. And it's not just the software. It is the DNA, it is the features, it is the people behind them, and it is even their mission. You will most likely find me working on my projects or my neobank by the beach, hopefully. And you will mostly associate traditional banks with lines and queues. But actually, these images may not entirely reflect what traditional versus neobanking is. So a neobank has a philosophy, and this philosophy is rooted in what makes us uncomfortable. And throughout this talk, I'll explain why discomfort has born neobanks. So some of the key differences that we have seen is that neobanks are fully online. They interact completely online. Every interaction you have from opening your account to your customer service experience is fully online. Whereas banks, traditional banks, are often characterized by their branches. Neobanks are very new. Just 10 years ago, we had our first neobanks. Banks have been in existence for hundreds of years. Neobanks are characterized again by their fully virtual nature, and not just in terms of the app, but neobanks have discovered ways to digitize every aspect of the customer experience, from customer support to even how they work, and even their ability to process tons of data without ever having to use a piece of paper. One really important thing I would say is the customer centricity. What does it mean to be customer centric? Everything around a digital bank is designed around a customer, where sometimes you have obscurity in fees. I don't know how many of us have ever found out about a bank fee that they had and didn't actually know that they had that fee, i.e. hidden fees. Neobanks hate hidden fees because consumers hate hidden fees. And there are a couple of other small things really tiny things that eventually define what a customer-centric neobank is. So, why neobanks? In my personal opinion, I think that financial inclusion, financial services go beyond just transacting, go beyond just opening a bank account, go beyond just interacting with financial services. I think this is the core of Africa's well-being. I think this is the core of young people, especially young people's financial futures and their ability to contribute to the economy. And I will take a small segue and discuss social media. I would like to assume that everyone here is on one form of social media: Instagram, WhatsApp, Facebook, etc. How did you get on WhatsApp? Do you remember the first time you signed up to WhatsApp? Do you remember the first time you signed up to Facebook? Did you see an advertisement? Did you see a video, a poster, an ad somewhere? Do you recall? You most likely didn't. And yet, social media apps remain the most popular apps in all of Africa. Kenya has the highest penetration of WhatsApp in the world. 97% of internet users use WhatsApp. Have you ever seen a WhatsApp office in Nairobi or Kenya? Have you ever seen a Facebook office? Now, social media was so fascinating to us as we began this neobanking journey. And we began to imagine Africa and how social media actually penetrated. There were a couple of key factors, obviously, the rise of internet and mobile phones, and the rise of increasing literacy and accessibility. But ultimately, I like to think the first time I used WhatsApp, someone sent me a message, someone wanted to send me a message, or rather I wanted to send someone a message, and I just didn't have enough credit. And I discovered I could use WhatsApp to send messages for free. And it was instant. And it was fun. WhatsApp is constantly innovating and adding fun features. Fun features like emojis and GIFs. But WhatsApp has transcended more than just messaging. We use WhatsApp for business. We use WhatsApp for organizing fundraisers, for mobilizing politically, for sharing news. My aunties regularly send me a lot of news. And WhatsApp has effectively become a de facto communication platform and business platform for commerce as well as other economic activities. I know what you're thinking. This is a presentation about neobanks. Why are we talking about social media? Because neobanks are more like social media apps than they are like banks. Neobanks, from their DNA, behave in a social attrition manner. Similar to WhatsApp, or similar to Facebook, you can sign up instantly. You have support that is free. You have lower fees, interest in the form of savings, and you have other packages designed for instant communication and instant access. So we built a neobank designed for the exact same population that the social media giants have built for. And if I could challenge everyone to think about what does it mean for a bank to look like social media? Ultimately, it means that we have to make it fun. We have to make it social. And that is somewhat conflicting to banks. Now, we have a couple of bankers in the room, and a lot of the time we think of banks and fintechs as competing entities, but actually they're not. It is not oil and water. Banks and fintechs actually can work together, and banks and fintechs actually benefit from working together. And I want you to imagine the power of a social media app partnered with the robustness and power of a traditional bank. Now, traditional banks are strong in the sense that regulation, security, and trust. We trust traditional banks. We trust their brands. We trust their people. I'm unlikely to put my entire life savings on Snapchat, but I'm more likely to put it, at a big bank. So what we've done, or what we imagine the future looks like, is the combination of these traditional banks with social media-like neobanks, and that then leads to an explosion in what we're calling the neobank. It is the transformation of the traditional banking model into a new disruptive social media focused model. Some of the advantages of these types of partnerships is just innovation. Big banks find it really hard and slow to innovate quickly. They are innovative, but it is slow. So banks can benefit from a ton of instant innovation by these types of partnerships. Next, fintechs like to build everything. Similar to young people who want to try and conquer the world and put their finger in every pie, fintechs like to build everything. And you've heard of the concept of a super app. Super apps are effectively what happens when a fintech succeeds or a startup succeeds at building everything. You can order food, you can shop, you can buy airplane tickets, and you can do your banking. You can pay for insurance, you can buy that bus ticket. You can do anything you imagine on a fintech app. There's a fintech app based out of Southeast Asia that lets you order a cleaner or a maid or a driver. The endless possibilities are possible. And for fintechs, one of the largest challenges of startups is entry into market. We personally faced a huge challenge when we were starting Fingo. I remember walking into a branch, having not the best experience, and walking out thinking, I will just build a bank. And the first place I took my questions to was Google. And I Googled, how do I get a bank? Get a banking license is the first thing that you need. Unfortunately, no one was willing to give me a banking license. And because of that, we sought a new way to enter the market, and this is partnerships. So market entry for fintech is actually really determined by existing banking rails. And what that means is that banks can effectively do what they're good at, which is managing the license and holding the customer deposits and creating the trust around the products. And fintechs can do what they're good at, which is creating an incredible social media-like experience. We've partnered with EcoBank, which is a Pan-African bank across a couple of countries, 33 markets. And that gives us the ability to be able to launch in these markets with, of course, the right regulation. What this has meant for our startup is that we've gone from just an idea to an actual product. And we're excited to be launching later in the year. This is the global phenomena of neobanks. Across the entire world, you have neobanks that are eating, and I mean literally eating, the market share of traditional banks. And in a lot of those cases, they're eating that share together, where traditional banks have their own apps and clients, and neobanks have their own, but they continue to grow. You recognize some of the names, but here's one of the most interesting graphs I have seen so far. The black line is JP Morgan and Chase. It took JP Morgan over 30 years and 5 acquisitions, as you see from the bubbles, to be able to get to 60 million users. The green and purple line are Cash App and Venmo. Again, very similar social media type banking apps. It took them each 6 and 7 years to get to 60 million users. Shocking. This is the effect of neobanks. This is why I compared them to social media apps. They are viral, and similar to how you ended up on WhatsApp, you don't really remember, but you know it was through a social connection, a social reason, and a social need. We are designing a world in Africa where young people need access to financial services, and young people need to be able to feel that banks and other institutions are designed for them. And we feel the only way to do this is to follow what we already know, which is leaning into fun, intuitive interfaces, leaning into lower fees, leaning into exciting propositions that young people can love and enjoy. Because I think ultimately banking should be an enjoyable experience. And as a neobank founder, one of the first things we try to do is, are you having fun with our app? Are you enjoying the experience of banking? Are you enjoying the experience of transacting? And so with that, I want to say thank you. And I know we have a couple of minutes. I don't know if we were allowed a quick Q&A.
You said questions? Them? Oh, all right. Wonderful. Wonderful. Thank you, Mr. Muhoya. Let's pick some questions now that we have that allowance. From that particular presentation, do we have any questions from Mr. Muhoya? Wow, I've already seen so many hands. Now, help me with the, let's get the microphone. Okay. That's a good one. Let's get the microphone there. No, how many questions do we have? 1, 2, 3. Do you have any on this side? 4, and then we'll be done. Okay, so first question.
Yeah, thank you, Kiiru, for the illuminating presentation. My name is Anton. My question is, you have alluded and such a fact that your interest rates are relatively much higher than the traditional banking. Why do you charge higher, very high interest rates when you set up your capex, your opex are on the floor? Why keep the interest rates in the ceiling?
Thank you for the question.
Just let me get all of them and then you can answer because of time.
Good morning, Mr. Kiiru. I'm Livingston. My question is around regulation, because as it stands right now, I know there is no clarity in terms of regulation of neobanks in Kenya. So how did you go about it? And then 2 is an issue around the partnership you mentioned with the bank. I know most banks try to be hesitant working with startups because of the risk. So maybe could you shed more light? Are you riding on their license? Are you co-creating together some products? Or what sort of partnership is it? Thank you.
Right. Yes.
Okay, thank you. Thank you, Kiiru. My name is Dalmas. I just want to build up on whatsoever my colleague has asked. I'm simply looking into the partnership model that the traditional bank can have with the new bank. What is the model? Because from where I work and where I sit, we are trying to revamp the youth preposition, and we do believe this is the way to go. So what is the partnership model, and what is the revenue share model that you do have?
All right. I believe we're done. Who was the last one? We're good? I did not see your hand. Who was that? Okay, yes.
Hi, Kiiru. I'm Roy Mushiri. So my question is about when you plan to launch Fingo later in the year, which kind of demographic are you looking at? I would assume it will be late millennials and Gen Z, though I believe the whole concept should be about accessibility to different payment options and availability of lending. So what are you doing as Fingo to enable that happen in a very inclusive manner across that demographic?
All right, thank you so much. Mr. Kiiru?
Yes, brilliant. Thank you for the questions. So regarding interest rates, when you open a bank account, you have the option of opening a savings account at the same bank, and then you get a bank-led interest rate. That's interest on savings. We're able to provide a superior interest simply because of we're able to provide the interest generation from different financial service providers, so investment managers, etc. So that's why the superior interest exists. In terms of regulation, I think for a startup, the most important thing is regulation. Otherwise, every single person will be able to just, launch and proceed with a neobank. So the partnership model exists because there are a lot of banks that see the need for kind of an innovation unit within their own bank structure. And one way that banks succeed at doing this is realizing that actually there's a concept called open banking. Banks can open up APIs to their partners, and through those APIs, they're able to build financial services that target demographics that they're not interested in, or they're not particularly targeting. So if you're a bank that looks, at corporate banking, and all of a sudden you want to go into retail banking, then the easiest way is actually to just build an API into your system and partner with someone like Fingo that delves into retail banking. In terms of the specific partnership model, there's whole structures on open banking that I'll be happy to share later on. But effectively, the model is we share the wins. And we do what you're good at. Fintechs are good at acquiring customers, whereas banks are good at actually creating the trust that customers need. Lastly, in terms of demographic, this is an election year. Between this election year and the last election year, there are 4 to 5 million new registered voters. That tells us that every year in Kenya, at least 1 million people are turning 18 to 19, getting their first paycheck, beginning to interact with the economy as adults. That's 1 million people going through a painful user journey to open bank accounts. So our initial target is actually the millennials and Gen Zs that are accessing accounts for the first time. And then we offer a superior product to people who are under 35 who want a more interesting way to interact with money. I think that's it. Thank you so much for the question, and it's been a pleasure.
Thank you so much. Let's give him one round of applause as he takes his seat. Asante sana.